Hey, welcome to another episode of Let's Talk Forex with Alison and Chris. This is the podcast where we discuss everything trading related, including psychology, strategies, and the realities of becoming a successful trader. If you have any questions, please don't hesitate to contact us at podcast@fxscout.com. Enjoy the episode.
Hey, Alison. How are you today?
I'm good, thank you, Chris. How are you feeling after your long 2 days of traveling back from Sweden?
Yeah, no, I'm tired. Thanks. Yeah, for our listeners, it took me 2 days to get back from Stockholm to Lisbon. We had a team meeting last week in Stockholm, which you attended to, Alison. Made the long trek up from South Africa. Very much appreciated. It was lovely to see you.
Oh, it was wonderful. I absolutely loved it.
Yeah, no, it was great, wasn't it? But then, yes, it did take me 2 days to get back because problems with my plane, and Air France had ended up having to reroute me through Amsterdam. So I'm tired, but it's really nice to be home, as I'm sure you're feeling the same way.
Yeah, I must say, absolutely, it was a mind-blowing experience. And I also went, obviously, to Venice. We went to a film festival there, then went to another part of Italy. But Sweden was amazing. Stockholm is just so beautiful. And it was so nice. We did a little tour around Stockholm. So I got a little bit of the history, which was fantastic. Yeah.
In golf carts,
yes.
In the pouring rain. It was fantastic.
Yeah,
it was really good. But yes, let's get on to this week's episode. So this week's topic is a really important one. Again, it seems to have had a few of these recently, but this is, I think, really critical. And it's about having realistic expectations for your trading. And it's something that we hear about all the time, but we want to go into what it actually means. What does that mean, realistic expectations? And also the flip side of that, what are unrealistic expectations? So that's what we're going to we're going to have a deep dive into that today, aren't we, Alison?
Yeah. I think it's important to state, you often see sort of stories on YouTube, particularly about these trader success stories where people have these luxury cars, these fancy villas, and they claim that they got that through trading. And sure, if you're a top trader and you really know what you're doing and you've got big capital to start with, then it's very possible to get to that point quite quickly. But you've got to understand what's realistic for most traders, and certainly it's not those types of stories in the beginning. There's a lot of hard work involved, and that's what we want to talk about today. Just what realistic expectations look like in trading.
Yeah, exactly. So the reality of trading is going to be very different from what you see in a lot of places online, like, on Facebook and Instagram, TikTok and Telegram. You're going to see people with these glamorous lifestyles you're talking about there, Alison. And while that is possible, if you're one of the best, forex trading is like any career. If you are successful, you're going to end up being wealthy, and then you can spend your money however you want. But it's the being successful part that's really difficult with forex trading. And that's not just in forex trading. That's true in all careers. I'm sure there's out there very unsuccessful doctors who are very poor. But yeah, so it's really about the success in forex trading.
Yeah, so I think that's very important to be aware of from the outset. And what people often miss is the difference between risking a small amount on trades versus making those big flashy profits. So if you're starting with an account of, say, $1,000 and you expect to double that in a month, you're probably setting yourself up for disappointment, because it's more than likely that you're going to have to risk too much, and therefore you're at a much higher risk of blowing up your account.
Yeah, absolutely. And that's a really common mistake. But on the opposite end of the spectrum, let's say you're risking just like $1 a trade or something, but then you want to make $200 a trade, and that math just doesn't add up. And I think that's a lot of beginner traders go in with these really small accounts, and they think they can make that work. But if you're starting with $1 a trade, to get to the point where you comfortably can make $200 a trade while staying within, decent risk metrics, you're going to have to trade a lot for a very long time. And of course, some of those trades you're going to be losing trades. So I'm not saying it's impossible. I mean, it's almost impossible, but it's not completely impossible. But either way, it's going to take you a really long time to get there.
Yeah, I mean, you can't expect to hit those big wins without basically expecting to hit the same level of potential loss, really.
Yeah, exactly. Traders often get surprised when they blow up their accounts because they're chasing these unrealistic goals.
So basically, there's a fine line that you need to sort of get to grips with. If you're risking too little, you won't see much growth. But if you risk too much, you could lose it all, blow up your account. So as you mentioned earlier, Chris, it's a way to see it is that it's a real balance between your risk and your reward. And it's also finding out how your psychology deals with that. That will make probably the biggest.
It is very much. That's exactly right. And if you're serious about making a living from trading, at some point you're going to have to increase your risk, and you're going to need to accept the consequences that come with that. And as you mentioned, Alison, a lot of those consequences are psychological. Yeah. So let's say you've grown your account from $1,000 to $10,000 and you want to make 40 grand, 40 US dollars in a year. You're going to need to be more aggressive, but that also means you're going to have to be prepared for big losses as well.
Yeah, I mean, it's about managing your expectations and being comfortable with the potential losses. You can't be surprised really if you lose a significant amount when you're risking large percentages. It's, statistically, that's what's going to happen.
Yeah, exactly. And this ties into a concept I like to call the time versus money, or the time versus risk scale. If you're patient and you're willing to take your time, you can grow your account steady by risking smaller amounts, by risking less of your capital. But if you want fast results, and if you want those big wins, you're going to need to increase your risk. And that's when things can get dangerous.
Yeah. And also just in terms of the growth of an account, many traders expect to see this straight line going up, but this is not reality. You're going to have some days where you make a big win because, there was, you happen to spot something correct in your trading, or you just happen to be lucky. And sometimes you're going to have big losses, even though you followed all the rules and you've backtested your strategy. It's just not a straight line. There's a lot of up and downs that you're going to see.
Yeah, exactly. It's account growth is more like a wave. You're going to have your ups, you're going to have your consolidations, and then you're going to have your drawdowns as well. And look, even the best traders experience this wave, this kind of wave growth, if you want. And it's all about adapting to market conditions. No one's account is just going to grow in a straight line forever. And that's why, on this note, it's really interesting. You go into these copy trading platforms, right? And you see a lot of people who, a lot of the really popular, professional traders who people sign up to, their signals, they have this straight line of growth. And that always freaks me out a little bit because I'm like, that's not natural. And that's going to come to an end at some point. If you're seeing a straight line of growth, whether it's in copy trading or if it's something that you're trying to achieve, just be aware that it may happen for a little while. You may get there for a little while, but it's not realistic in the long term.
Yeah. And as you say, the market changes all the time. So you cannot see your account grow in a predictable linear fashion. And basically, if your goal is to make money fast, then you have to understand that you're also signing up for periods where you're going to, that the market and your account may go sideways for a bit, or even down. So it's just really getting to grips with those expectations and not expecting it to do something that it just can't do.
Yeah, absolutely. Yeah, and for those traders who are just starting out, this is really critical. If you're still learning how to trade, keep your risk low. And the money in your account when you're just starting out, think of it as a tuition fee, right? Think of it as you're paying somebody to learn how to trade. It's there to help you learn the ropes, and it's not there to make you rich overnight. As I always come back to this, but as Chris Weston and Pepperstone have said, the first year of trading is just about keeping your head above water. Don't try and make that big money. Think more about conserving your capital, keep your risk low, and learn as much as you can.
Yeah, and I think another sort of critical point here. When we spoke to Neil Bateman, he was saying that his account grew by something like, I can't remember, £6,000 in his first couple of weeks of trading, and he was so excited. But then he started risking too much, and I think he lost sort of double that in the next 2 days. I can't remember the exact story. And I thought, it's so typical. Beginners get in and they make good money in the beginning, and then they think, hey, this is just going to grow from here. And the wind always gets knocked out of your sails.
It does.
If you're getting started out, as you said, just be aware on building skills. and risking small amounts in the beginning. It's absolutely the wisest way to go. And also it'll get you used to losing trades, because losing trades are inevitable. Again, if you don't get your risk reward ratio right, and you're trading on a strategy that hasn't been back tested and doesn't have a good win rate, you're just setting yourself up for failure, really. But for those who are ready to take it to the next level, how do you decide when it's time to increase your risk?
At the end of the day, it's a personal decision, but it's going to depend on your strategy, on your own personal risk tolerance, and also your goals. If you've honed your strategy and you're confident in your skills, then it's probably a good time to increase your risk a bit. But you also, as you point out there, you need to be mentally prepared for those losses. And I think that's something that you're never really prepared for, when you increase your risk and you get smacked down, you get a big loss. You need to see it coming down the pipe and know that it's going to happen. And also, I think, keep an open mind to how you're going to react to it.
Yeah.
The key is knowing what's realistic for your situation, and don't expect to make millions when you're risking small amounts. That's just not going to happen. Yeah,
exactly. If you risk small, you'll grow small, but safely. But if you risk large amounts, you might grow fast, but of course you'll have to be ready for potential big losses. So it's basically about, finding out what works for you, having the realistic expectations, and then basing your goals on those realistic expectations as a trader.
Yeah. And look, trading is a long-term game, you need to be patient, you need to be disciplined, and realistic is really, what we've been talking about this whole thing. So, but, patience and the discipline are also really key parts of this. And, don't get sucked into those flashy success stories. Don't try and make $1 million in your first year. And really spend that time to learn and understand the risks behind big wins. Why if you win big and you're just starting out, try and have a look at that and try and figure out how risky was that win really, and could it have gone the other way. And that's always, I think, a really sobering lesson for beginners.
Yeah, that's really good advice, Chris. Yeah, well, I think that's all we have for today. Thanks for joining us on this episode of Let's Talk Forex. We hope this conversation will help you rethink your trading goals and your expectations.
Yeah, definitely. And if you enjoyed today's episode, then make sure to subscribe, leave a review, share this with your fellow traders, and we'll see you next time. See you next week. We've got a special one next week, don't we, Alison?
Yeah, so we're speaking to Caroline Rundell from Trading Angel. We've interviewed her in an episode, I think, in May of this year. I actually can't remember when we did. But she's got a really interesting trading story, and we're really looking forward to chatting to her again. We're actually going to be talking to her this time. Last time we discussed her trading journey, but this time we're going to be talking to her about how she coaches potential traders.
Yeah, no, exactly. And since we last talked to her, she's got her financial advisory qualification. So yeah, it's going to be fascinating to speak to her about that. I really look forward to catching up with her again. So yes, we'll see you next time. And remember, stay disciplined and keep your expectations in check.
Thanks, Chris. Cheers.
Yeah, thank you too, Alison. Speak to you soon.